Okay, I think we should have the JSW Steel numbers flashing on the screen any moment. The wires are right now suggesting a net profit figure of 1620, but that's a wire figure, still waiting for the actual release to come in and see how that really plays out. I don't think we have the... Okay, there's the first number that's coming in. Yeah, 1624 is the net profit number. Now, 1624 is well below the poll. Poll was 1720. Let's see what we're going with on the top line, because the top line estimate is a growth of about 17% on the top line with a number of over 20,900 crores, 20,300. No, that's a top-down miss coming in from JSW. We'll find out the EBITDA. This quarter at least is supposed to be good for JSW Steel, because you have the benefit of higher steel prices over the past 3 months, when then prices started cooling off. So the expectation was that they do really well even on the operational front. But I think first glance is a bit of a miss right from the top line. Stock is now cooling off from the highs. We'll get to the operational performance in just a minute. As we do that, let's actually quickly also run through some of the estimates that we're looking out for tomorrow. We have, of course, the RBI monetary policy in full focus. Lata is here to tell us whether the new governor, Governor Shaktikanta Das, is going to oblige the markets with a rate cut or not. Lata.
My sense is he would, not for any other reason except that the data is indicating that there is space. What is the last inflation reading? 2.2%. And if you looked at the past year's average or the past 2 years' average, we are still at below 4%. As well, if you look ahead, which is what the monetary policy should, it shouldn't look behind, the global factors are looking benign. We've seen the Fed move away from a hawkish position, the ECB as well. So I don't see too many arguments. The debt markets are still hurting. So a little bit of help at this juncture will help rather than punish them further and wait for April. But there are very strong arguments. See, Ritu's poll of several, I think she interviews at least 20 market people, that is indicating a 90% expectations of a pause. My own Citizens Monetary Policy Committee, by a whisker, said that there will be a pause. 3:2, and their arguments are really the fisc. There's such a big stimulus that's being given. Technically, if you count the revenue numbers realistically and not by the 20% rise in revenues that the budget is assuming, there's actually a 4% fiscal deficit. And then they may take a dividend from RBI, which is again a lot of money in the system. So fiscal stimulus is there, and therefore where is the need for a monetary stimulus simultaneously? And therefore, it may be difficult to convince the RBI DG and ED, who are from the previous monetary policy committee, as well as a person like Chetan Ghate. So and you may not want to give a cut with a divided house. That will be very blunt. That's the feeling. That said, I want to say that although it is a photo finish, it is a whisker. By a whisker, it can go this way, that. I don't see the bond markets reacting very, very violently either ways. If there is a cut from the current 7.58 at the moment, it can go to 7.38. And if there is no cut, it can go to 7.68. We are not talking of a very big swing. And this is in the 10-year, which is well traded. For other longer-term paper, even the impact will be even less. So the impact will only be in the 90-day treasury bills and things like that. The rate at which an NBFC will borrow or a corporate will borrow, I don't think there'll be any material difference. So, let's not run away with as if it's going to be an earth-shattering event. But one thing, we have to watch the NPC statement very carefully, because there is a new man
exactly.
at the top.
That's what I was about to ask you.
So he may put in a different thought process.
The thought process could be completely different. And of course, Shaktikanta Das, of course, the maiden policy. Also, it's the weekly options expiry on the Bank Nifty tomorrow.
So for that, it will be important.
So it will be very important, and it's happening at 11:30, of course, this time.
So you have enough time to play the market.
To play the market after that. Lata, thanks a lot for taking us through that. By the way, this really is a mixed set of numbers from JSW Steel. Now, initially there was disappointment, then there was a rally, and that rally is now being sold into. Now, for commodity companies, you look at the EBITDA number and the net profit number. The top line number, of course, beyond a point, perhaps not that meaningful, because you want to see how much you are making out of selling a particular amount. On that, there's a margin of 22.2% versus a poll of 20.6%. That explains why the stocks recovered. But what explains the miss on the net profit? Is there a one-off? We'll find out. But these are backward-looking numbers. So let's see. For now, are in the stocks holding out. Also keep in mind, it's an index stock now, and it's fallen quite a bit from its highs. The big call here that you need to take on steel is, where are we in terms of that steel cycle? And if we are still in the middle, perhaps you'll see a big bounce. If the peak is already made, then of course it's anyone's call. But for now, that stock holding with about 2% gain. Well, that is JSW Steel's statement, which is saying that they're likely to fall short of guidance of the 16 MTPA by 2 to 3% because the 9-month sales volume are now 71.6% of full year guidance, and lost volumes unlikely to be recouped during the fourth quarter. So the overall sales volume would be lower. So that's a bit of a guidance cut that you have from JSW Steel, which is coming in right now, and that's why the stock's off the highest point right now.
Okay, that's JSW Steel. So mixed numbers, as Anuj has been pointing out, including, of course, now this guidance caution that has definitely come through. But on that note, before the day closes out, let's quickly get you highlights of some of the opinion that we got from Bharat Iyer of JP Morgan. He is expecting 2019 to be a volatile year.
I guess confidence levels will return only once the political clarity is there. I think it will be a very volatile year because I think on the positive side, what we are seeing is earnings are making a comeback, at least for the large caps. And this is the way the cycle typically unfolds, isn't it? The large caps start delivering earnings and then the mid caps follow through after a lag. I think financials look interesting. We see a lot of value in areas like utilities and oil marketing companies. Oil has corrected meaningfully and stocks are still very, very depressed. So that's one area that continues to look very good. IT looks okay. I think there are still some segments which are benefiting from government investment spend in various areas. So I think there's still a lot of value to be seen out there. I think there'll be a lot of noise, but which typically happens, and there will be volatility, and we have to be prepared for that. But X that, I still think that earnings being a reasonable driver, valuations having come off, and the macro being stable, courtesy stable oil prices, I would say 11.5 to 12 is where we would see the market, be.
Okay, all right, that's the view from JP Morgan. We are down to the last 2 odd minutes of trade, 11,070, pretty much going home at the highest point, Anuj. With today no volatility, no confusion, and no sort of scare whatsoever. How does this screen look?
No, I mean, at the risk of repeating myself, Surabhi, on the index there's been a breakout. Now, this some part of this could be also because there's expectation of a dovish policy tomorrow. But the market still remains unhealthy. The advanced decline still at about 2:3. You still want to see this market broaden a bit. That's this narrow market. It's not going to continue for long, but anyway, for today, of course, things look quite good. The Nifty going home with a breakout. That range has been broken now. 10,550 to 11,000. I think we spent so much time. I think better part of 4 or 5 months we spent in this range.
Yeah, the last time we were at this 11,000 mark was back in September.
So,
September 28th, 29th. I was looking at the
exactly.
date as well.
So we have spent almost 4.5 months in this band. Finally, that's been broken. Logic would say that once the market's broken, the range of fresh expansion should start. But this is not a bull market. Let's not forget that. So you still want to see evidence. Anyway, let's talk about stocks that moved. Tech Mahindra was your stock of the day. It gave you a gap up, a fresh 52-week high on the stock, 8% higher. Finally. By the way, Cipla is going home with 6% gains on the stock. That's entirely the market positioning. So that one up 6%. Z was up 7%. Tata Steel was up 4.5%. Bajaj Finance 4.5% higher on the stock. 27.17 now on the stock. The 52-week high or the all-time high has been 2994. So within $200 of that, 200 to 280 bucks of that. HPCL, Bharti, Infratel, a couple of other stocks. ICICI Bank made a move. Even Tata Motors ahead of numbers is looking quite interesting. JSW Steel was up about 2%, though of the highest point, of course. On the index, at least today, the market showed you good breadth. 44 index stocks going home with gains. Only 6 index stocks were down. The top loser being Adani Ports. But on the index, at least, there was a bit of a breakout that we had. Absolutely no complaints on that, with about 134-point gains.
Well, on the mid-cap side as well, the screen did look a lot better. I mean, today you won't find us rattling off names of stocks down 15-20%. So to that extent, it's a bit of a relief. I'll talk about the winners first off because the mid-cap index did recover towards the close. Dish TV, I mean, look at the stock go today, 21-22%. Some of these SL Group stocks have done well today. Then you had the likes of SRF, 10.5%. A good quarter for the company and strong, perhaps, commentary in the con call. 10% up on that stock. Praj was a winner, 8.5% up over there. Then you have some of the other names like Bandhan Bank, 6.5% up. Chambal was up about 5.5%. CESC, 5.5% on the upside as well. IRB was undoing some of the damage from yesterday. So it fell quite a bit yesterday. Today it was up about 5%. The ADAG pack is very interesting because all of the ADAG group stocks, barring Reliance Nippon Asset Management, have ended deep in negative territory. Look at Reliance Infra, 31% lower. Reliance Capital, Power, all of these stocks are down. And now you pull up a Reliance Nippon Asset Management, and that stock's actually up almost 18% as we speak. So that's the sort of change on the ADAG group. The other stocks that had a bit of weakness on them included Tata Chemicals, down 8% on results. IDBI Bank was about 6-7% lower. And there was some selling that we saw on Muthoot Finance after numbers as well. So this is how it kind of adds up. But far more winners than losers. Not such a bad day for the mid-cap market also. Let's take final thoughts with our guests. Ashwini and Mitesh are with us. Ashwini, now given that this has been a one-way straight rally, 11,070 on the screen, how does one approach this market tomorrow?
Well, the difference between a bull market breakout and this sort of breakout is that the bull market breakout would have ended at 11,150. So the idea remains that buying into this market incrementally is not a good idea. If we get back towards 11,000, 11,020, maybe post the policy tomorrow, that zone will be much better to buy and you'll get lots more traction. Overall, yes, we are headed up, and I don't think mid caps have the gumption in them to follow through. 10,600, 11,000 is about 400 points. So we could have a 400 point expansion. So that way, try to buy on all dips. Now it's not a sideways market, so it's not a good idea to short at higher levels and cover and all that. Just try to be on the buy side, but on dips.
Okay, let's see if this expansion continues tomorrow. Thank you, Ashwini and Mitesh, for being with us.